Hey guys, this is Julie, J Auto Trading Strategies. Thanks for coming back. This is the daily chart showing a quarterly distribution in the E-mini S&P 500, and the top chart shows you levels of quarterly key support resistance levels using the bell curve methodology. So ones are whites, um, twos are blues, threes are orange, and we measure from the mean to the 1, 2, 3. And you can see this white line in the middle of the chart is acting as the mean inside this quarterly ones. We calculate on multiple time frames like 3 month, 90-day, 12 week on both the session open and close. And you can see there was just this huge consolidation of resistance right here that held the market from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days on that line. 16 days. Let that sink in. And then finally it broke. And so where does the market go if it breaks the ones? Go and look at your standard deviation bell curve. So, the statistical concept is that you've got, a curve like a bell that represents the data, right? All of it, pretty much. Um, 95 to 99% is your sweet spot for the full range. 68% is the meat of the move, one standard deviation, so it's 34% on each side. So you have the middle, and then you go to the one, 34% on each side, totaling 68% right here. So these are the ones, they're white on my chart, going from the 0 to the 1. If the 1 breaks, where does it go? It goes to the 2. If the 2 breaks, it can go to a few statistical levels, the 3, and or break out and go into the wings. We can do the tails also, which are equal moves of the distribution size itself for that distribution, quarterly, weekly, monthly, daily, or we can do whatever Fibonacci or other level you would like to use. Um, Extend those tails either from the 1, 2, or 3 on the session open or the session close. So we can do it all, and we can also plot the oscillator below the chart showing the actual point range. So you see the market trades to these targets consistently. So here's 100%, and you can see that it is, a desirable target for the market to trade to. So these lower lines are here at 68% and 75%. Oops. There we go. Kind of close together, 75%. So you could put a 50% line on here also, which is, a really good level to understand for volatility, very important. So when you get your NinjaTrader, just pay attention to these lower oscillator levels. This is the PT2 indicator. And click the wrong thing, sorry. 50, okay. I was close. All right, so right here you can see it's a target a lot. And the actual distribution, the 14 period distribution on the daily time frame, you can see that the actual 1 period, you can set this to anything, day, week, month. I use a day. So the actual 1 period daily travels in and out of the daily distribution. And this is an important concept because you can see when that yellow line is inside the distribution, you're not going to break out. But when you're outside the distribution, that's that big range expansion opportunity. And you see how big the bars got? So you know when you're trading an algo whether your vol is normal inside the distribution or excursions. So you know whether to look for normal distribution or excursion for your profit targets to trade to. We measure excursions as well as the normal distribution, which sets us apart. I mean, in addition to everything else. So let me show you what I'm talking about. So we can do the quarterly distribution on that normal distribution line that everybody will give you, but we can also give it to you on a current volatility basis, right? And so that's just changing the period to 1, which shows you the actual 1 bar volatility. And you can see here that we are at resistance 59.2875, which held the market back. And how did we anticipate the market would be held back instead of breaking it on Friday? Because we were below the 3. You're below your daily distribution, so you're inside the distribution. And it basically stayed around the 2 most of the day, 40-point range. So it was trading inside of a 40-point range. You can actually understand the point range that you're looking at. Look at your screen. It tells you 1, 2, 3 daily bases right there. You can do the same thing for your 1 hour initial balance, which we do. In fact, that's our trading templates. We trade those 1 hours. Each hour is like a volatility envelope. 8 to 9, 9 to 10, 10 to 11. Is your hair standing up? It should be, because we can tell you per time frame whether that volatility is inside the distribution itself on that lower time frame or outside. So when you have an higher time frame with the volatility on the outside, you can drill down to your lower volatility levels to time your entries even better. So right here, Friday, we had a 90-day 1, 3 blocking the price. So holding it back, resistance. And if you look at your smaller time frames, that 59.22 monthly 1 that I've been sandblasting for the last week, 1, 2, 3, 4, 5, all 5 days I've been hammering 59.22. Remember what I showed you, how many days that was on that support resistance level prior to this? These levels can hold for a long time. I have seen, look, here they were trying to go short. Look at every day, get to that one level and just trade in this range up and down in that little zipper until it breaks out. So support resistance is very important in the market, especially around these option levels. There's a lot of money on these lines if you understand how options work. Those 1s, 2s, and 3s. Here's the weekly one for the realized volatility. And you can see that the weekly, monthly, and quarterly were all in resistance mode with the daily inside the distribution. You don't really want to be planning for out of the money at all unless you're out of the money. You can be inside the money, making money inside the distribution, going from the 2 to the 3, or heading straight up, bouncing off of the 1, going up. I mean, this is a great place to pick up a cheap trade, right? If you're trading volatility, because if you hit this lower white line, there's really nowhere to go except for up, right? For volatility. So once you get these type of concepts down, that you can actually see on your threshold level where that daily volatility is. So here's this dip, buy the dip. Talking about volatility. Yep. And then it shot up. The volatility increased. So know where you are on your distribution, whether you're low, medium, or high, and put this back. Okay, so we looked at the weekly. The daily travels the daily range, usually from the Globex open to the one. And if it's going to stay inside the distribution, it stays inside that one. We um, stayed inside the one on October 16th and a good deal of the session on 17th, but it did break and it went to the twos. So trading from the 1, 2, 3 on an intraday basis is how everybody trades futures. And so having a model to help you map where you are inside this daily distribution is pretty key to constructing a successful trading plan. So we also can put the edges, the spread lines on the distribution for you. So just set up a chart so that you can sell premium and see where these outside levels are. If you need to extend a range out, we can always add a higher tail to a level, like right there. Get too close for comfort. Oops. Okay. And then we can add little targets above or below it. And you can you can, this is equal measure. So that first line would be one half of the mean to three. The second line is one time mean to three, so it's actually two times the range. The third line is 1.5 times mean to three, which is two times mean to three, but three times the actual range because you count one for the range. 1, 2, 3. So there's your 1, 2, 3 at the end. And that's kind of rare to hit those. But those are the outliers that you want to know where they are in case the market does go for it. We can measure that on multiple time frames. But most, by and large, the market respects the levels, and you're able to sell premium around these levels on a daily basis, especially knowing whether you're inside or outside of the distribution. If you're outside the distribution, you're looking for those edges, right? Look how that held. It went right to the edge, and look at this, stopped on a dime. Look at that. So, we do tails intraday, and but these measurements are not back painted to measure what happened. These are actual levels that are standard levels that everybody who has the indicator can set up: daily, weekly, monthly, 23, 30, 37 days. So all of your distributions, 1 period, 14 period, open and close. We got it all. We got you covered. And then, like I said, you can figure out whether you're inside or outside the distribution to know whether you're going to be needing those edges, right? Because if you're heading straight out and getting close to that three, you want your alarm bells on, right? You want to be making decisions on how close are you to the edge line, and do you want to just roll your risk out a little bit on that target. So you could have targeted tails alerts whenever that condition happens across the three on a daily. And that gives you the heads up that you're trading to targets. Weekly spread, same thing, um, but just on a higher time frame. And if you like, you know, selling um, call spreads or put spreads to generate income, or calendar spreads, or short strangles, look at this. And it's all standard levels. Look, it went from the low to the high. Look, right there, same level. And that is a one period. I can tell the greens are one periods. All right. Whenever you see a green line, that means that's current real volatility. It's like high live. So it's a weekly one. It's the actual third. It's the third. It's the PT3 of the week, but on a one period. Yep. Pretty good level to know. And if that breaks and you look for your outside levels, and they're all the same, I don't change it. That's what I'm trying to emphasize, is we're not back painting this to match whatever chart pattern there was, but you have to be careful. That doesn't mean the volatility is going to trade the same way going forward, but usually you can see that when they get to one of my levels, here's another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 day resistance right there. So, and here where they broke it in August, that was the BOJ. They waited for it to get on the 3 and then they made their announcement. They broke the spreads on purpose. Eh, okay. So here's your upside targets for the E-mini on the 23, 30, 37 day. 60.91, 61.14, and 61.36.50. Those are the three outside money makers. So I would say there's a lot of risk sitting at 61.50 outside that line. 61.40. But usually, when they are trading risk going into an event, they park it in the middle. And that's why we're not seeing the one outside the distribution. We're inside the distribution, is the way I'm looking at it. So let me change gears real quick. And instead of, looking at these higher time frames, let's boil down and show you what you can do intraday with JATS PT, because I think a lot of you are missing the big picture here. And basically, that's range expansion. So we can model when the one period is outside the 14 period and apply a little bit of momentum to that to get a directional breakout with it, that range expansion opportunity, um, or just put a bar direction on it if you don't want to require momentum. And other filters, like requiring a PT2 slope to be in the same direction, can clean it up a little bit so that kept you from entering long on this bad wick right there. And I can show you how I do these things using the PT2 slope and or the price oscillator slope. Um, we have the price oscillator, which we haven't talked about a lot. But if you apply momentum, bar direction, price oscillator slope, you can be, a little bit more restrictive in your range expansion opportunities. And the goal is to be able to take that first signal, and trade it, long or short, up or down. Um, and you can use other methods of, you know, filtering, with an EMA or um, a median line. But the overall goal of this is to be able to capture a directional trade opportunity when the one crosses above or below that level on these time frames. And you could use this on a 15 minute, 30 minute, 60-minute, 5 minute, whatever chart, so that you can get in and out of these breakouts. And then we know the point ranges that are standard levels that the market would try to reach. We can do that from an intraday time frame, daily, or initial balance, what the risk size of the 1, 2, 3 on the first hour of trading, by adding chart distributions. So we can add a PT2 instance to the current one. The current one on the bottom oscillator just shows that time frame, the 15-minute, but we could put on a 60-minute on top of it and put it on top of that. There we go. So now we can see that the reason the one travels to where it does is because it hit that 60-minute 3 right there, look. Or the 60-minute 2 was holding the 15-minute volatility ranges. And when that 2 broke, that was the big breakout spike. And it could have been heading to a daily time frame. So you can put a daily on top of it also. And then you have your point range differences on that side monitor, so that you can actually get tangible um, targets to trade to. Uh, if you wanted to put a Globex range up or a 1 hour IB. So here's the daily, and I had the 60-minute. Let me put this on 2. Sorry, hang on. There's the daily. And I'll add a 1 hour IB as well. Okay. All right, bloodhounds on the third one. So the 7 threshold I use for strategies to like determine if I'm trading long or short vol. Really, you could say anything under the daily 1 would be short vol today. So you could come in and change that to 1025. Um, and then arrange your strategies knowing that you were within 10-point range 1025. You can put yourself in any point range according to the statistical probabilities that you think the market might be trading in. The 1 hour initial balance is 9 points for the three. So between 9 and 10 points. Oh, that's a 60-minute range. Where is the 1 hour IB? Right there. Maybe that 10 points is for the 1 hour IB. Hang on. Yeah, that's the 1 hour IB. Sorry. So definitely inside the 1 hour one for today, inside 10.25 points, you're you know that you're in a low volatility environment, and you're not going to be trading but for short distances for your profit targets. Anything outside of that, you would try to reach, those outside targets. See how it picked up? Outside this three, the 60-minute three, it broke the 60-minute three, and that's when it started taking off. So you could, see when that 60-minute three was breaking down and trade directionally in that opportunity zone. Put some position size on it. Otherwise, when you're trading inside short vol, low vol longs, you can um, learn to time those as well with the volatility. And I'll show you how to do that. I've got these templates set up for you. These are not trading algos, these are just templates to show you how to set it up. So these are low vol longs that you can just enter on all the bar lows and trade it up the point range, excuse me, for your distribution. And just think of all the cash registers that go off because you're controlling the volatility and the direction, and you know where to enter. Low vol on the lows, enter on support or on the open, and both all the time, and then just play the odds per bar. You want to go 1 hour, 5 hour, whenever that 1 hour breaks the 5 hour line. You can go long or short depending upon the direction. I'll show you how to set that up. The hedge fund algos, CTA algos, are sort of set up like this. They know when these transitions occur and what direction to trade those in. I've got this on the range expansion template now. So this is just, you know, showing you can do this on any time frame. You could do 15-minute 1 hour, instead of 1 hour, 5 hour, or you could do 5 hour daily. You could set your little volatility zones, how you want to trade them, and then trade in and out of these thresholds. And again, these thresholds are actual point values. You have points and levels, and you know if you're in high vol or low vol. Um, I gave you a low vol long. We could do the exact same thing for high vol short by just creating the logic template. And I'll show you how to do that on Wednesday. All right. We'll get your range expansion V6 template working. And for everyone else who is a prior JAT subscriber, this afternoon I'll be sending you your individual promo codes to access the Moon Room with your own individual ID. but for all new subscribers going forward, the open house ends at the end of October. So you have a chance to come in and see the Moon Room, the JATS trading community, points and level, where I post some intraday information on support resistance and give you support resistance levels and range extensions. So if you do see that one going outside the 14, you would have extensions for the day to trade to. So we give you points and levels. Points for the morning are posted daily, weekly, monthly, quarterly, and range extensions. So get in on all the fun at the website. I also do a live stream, trying to work that out so it doesn't drop. Um, but you can come back in and replay the day um, or the period. And hopefully all this will get worked out. I'm going to try to build a past stream library and keep that up to date. So get you the information that you need, do a market wrap at the end of the day. So hopefully some people will stick around for November. But and get some new people in here. If hopefully get anyone that gets the indicator on NinjaTrader can get access complimentary to the Moon Room. So come over to the website and get the NinjaTrader indicator so that you can have the levels on your own chart. Or if you don't have NinjaTrader, come over to the points and level trading community so you can see the levels. After the 31st, I'll have weekly, monthly, daily, annual plans that you can choose from. And then you can subscribe and unsubscribe at your will. All right. Well, we appreciate your time. Thank you so much. If you like these videos, give them a like on YouTube, and we'll talk at you later.